just don't care. You just, out of sight, out of mind, and that's how people will get into fucking holes they can't get out of. Okay. So as fun as yesterday was, I love that you're recording this. As fun as yesterday was, most of us made bad decisions, right? Negative NPV decisions. Right?
Not me.
Some of us got lucky, right? That's the whole point. Okay. As long as we recognize that imagine a bell curve for a second. Right? Everyone know what a bell curve is? Okay, so the right smack in the middle, the 50th percentile, the vast majority of people go there and lose money. Okay? One standard deviation out, you get into why it's called that. Right? Some people make a little bit of money, most people lose a little bit more money. Okay? And every now and again, 2-3 standard deviations out, you got people like Warren that actually make a killing, and the vast majority of people like John maybe on the side of just losing a killing, right? So we need to understand the vast majority of people on that bell curve are losing money. And then some people get away with murder, right? So,
For once.
God bless it. The point of this meeting is to hold you guys accountable, or we can all hold each other accountable to textbook bad financial decisions so they happen less and less and less. That's it. So yay, John, congrats. You're an idiot. We all knew that. Okay. Now, short memory. It's like striking out when you're at the plate, right? You can't sit there and drone on about God and then go not live your life and not go do rich person things and actually make money, right? You can't hang your head and think about the fact you made a bad financial decision, right?
Yeah.
Clear your head, short memory, get back out on the plate and hit the ball, right? First off, I have no goddamn idea, just like them, right? So I'm gonna give you.
Why does no tax people don't even know? Like what?
I used to think that tax was like super black and white, like accounting. It's absolutely not. It couldn't be more the opposite. I'll put what I understand this to be up here, and then we can run through it. This is applicable because let's say that Warren, let's plot a zero on the end of Warren's winnings yesterday, like $10,000. That's a lot of money, man. Like the government doesn't just ignore that. Shocking, the government's going to get paid. And what Nick's asking is, hey, at what point does that get taxed and at what rate and how much can I expect to pay and all the right things, right? So every single one of us pays an income tax on your paycheck. If you don't believe me, ask for the pay stub. It's disgusting, right? So everyone pays an income tax. What Nick is asking is different than income tax. Capital gains tax is what you pay when you sell, very likely an investment or something that you receive. So like the lottery, capital gains tax. Okay? You make $1 million, the government's taking 5 million of it, or 500,000 of it, for the low price of living in the United States. Thanks. Right? You make 10 grand, or even $1,000 gambling. I'm gonna have me probably 40% of that, right? What rich people do is work their ass off to mitigate that number as much as possible, right? Because, let's play this game. Is making $100,000 a year good?
Yeah.
Right. What if I could tell you that making $60,000, there's a world where someone who makes 60 grand is the exact same as someone who makes 100? Everyone would be interested, right? Everyone would be. I'm telling you right now, that happens all the time. All the time. Okay. So let's do this. Let's say that someone buys a house for what, 100 grand?
Can we just do my example?
Sure.
230.
Okay. And so we put money into it.
20.
Okay.
350.
You guys, for you to act guys, like in dispo guys, like people ask questions about this all the time. What act guys got a question about taxes, what they have to pay? Right? It's coming. Good. You probably get it all the fucking time. Okay. And there are a lot of people that have creative ways on doing this, but in my opinion, it's so much easier just to sell someone. Look, you show me a guy that has to pay tax, I show you a rich motherfucker. Right? That's a liquid guy that has money in his pocket. That's the whole reason you're paying tax. You got money. I digress. Let's play this game. Is Nick's 100 grand here just an income statement thing or a balance sheet thing?
Balance sheet.
It's a balance sheet thing, right? So Nick is selling something that's on his balance sheet, and he's going to have now this much money back in his pocket. It's a balance sheet play. His net worth will go up by roughly this much money. Does that make sense? Congrats, Nick. Now, let's assume for a second this is an investment property that Nick didn't live in, okay? Because Nick did live in it. That convolutes tax code a little bit. So let's say this is just a simple flip for Nick, right? Nicky Mo LLC bought it for this, sold it for this. He's going to make 100 grand, yippee, right? tax rate is, well, let's play this game. How long did you hold it, Nick?
A year.
How many days, Nick?
365.
Good. So, depending how long you hold an investment, the government looks at that two different ways, okay? They don't like greedy capitalists that buy on day one and sell on day two and make a lot of money. Day trading is short-term capital gains tax, okay? That's normally about 33%. I don't know what the rate is right now. 33, 35%, okay? So let's do short-term. Long-term rate is 20%, okay? Would you rather pay 20% in tax or 33% in tax? 20%. Right?
Is it always 20?
Yeah. So that's the difference between holding it for. That's the difference between holding a house for 180 days and 366 days, right? Flippers pay this. Flippers that hold it for more than a year pay this. Does that make sense? That's just how the government wrote it. Okay.
Is the long-term capital tax, capital gains rate dependent on your yearly income now? Or is it
No,
always
capital-
standard
capital-
only 20% across every
Capital
single
gains,
person?
that's a great question. If you make $1 a year, capital gains is that. If you make 10 million a year, capital gains is that. That's static. Okay? They don't care about how much money you make. They care about how much money that investment produced. That's a great question. Capital gains has nothing to do with income. Look at, you bought, when did you buy your house?
3 years ago.
Okay. So, if Michael buys a house, okay, and Michael sells that house and makes $249,000 on the resale of that house, Michael pays exactly $0 in capital gains tax. Okay, because Michael is Michael, and they incentivize Mike because he lived there and he sold his house. Good for you, rock on, right up into the sunset. Here's your money, do your thing, right? No tax. Okay. If Mike makes $300,000, Mike pays short term. It depends how long he lives there, but long term, essentially, let's say they live for 5 years. Long term capital gains tax on the $50,000 difference between $250 and $300. Does that make sense?
That 250 is the threshold?
That 250 is a federally mandated number in the tax code that says if you're a single person, Michael Sanders is a person, right? Not an LLC, not a trust. Michael Sanders, individual, buys a house, makes $250,000 on it. He's not paying any damn tax. Okay? If Michael Sanders and his wife buy a house, double that. Okay? So they can make fucking $500,000 in profit and make as long as they live there, right? And pay what Fletcher's taking my next thunder, 2 out of 5 years. They have to live in that house. So they can do this. They can buy a house, live there for 2 years straight, move out for the next 3, sell it on the 5th year anniversary, make $500,000, pay no tax.
So what is that 2-year rule? Like everybody that I asked, it's split right down the middle. Nobody's like, I'm 100% sure you're not going to pay capital gains. Half of them say you've only lived it in 1 year, you're going to pay capital gains. Other half says you didn't make, you lived in it for a year, so it's not an investment property technically.
There's no way on your house. There's no way you should pay tax. 0% chance. I will put my name behind that. No chance. No chance. You lived there for a year. Who's on title?
Margie's.
Not that it matters because it's less than 250 grand, right? No matter if it's Nick or it's Margie or it's both, it's less than 250, no tax. Did they live there? Yes or no? Is that their primary residence? Yes or no? It was. No tax. So I think you got a 2-pronged approach to this thing. I live there. Fuck you. It's less than 250. Double fuck you. For this example, right?
Yeah.
Now, Nicky Mo Investments LLC, same thing. Nicky Mo Investments is paying. Is it short term or long term? He would hold it for a year.
Short term.
Depends who you ask, I guess. Let's play long term for fun. When did you close on it?
July 19th.
When did you close on this one?
Oh shit, it's February 24th to July 19th. Close and close. Bought it on February 24th of last year. July 19th this year is when we closed.
Over a year.
So
Over a year.
So you owned it for more than a year?
Over a year.
Yeah.
Yes. You're fine. It's definitely long term. Totally long term. But if Nicky Mo Investments did this exact same thing, Nicky Mo Investments is paying 20 grand in tax. Which sucks. But Nicky Mo Investments is also taking home 79 grand.
So it
Right?
says it's his personal residence.
He lives there.
Over a year.
Yeah, he lives there. The government wants people to be able to buy a house. Shocking, the government incentivizes people to own homes. right? The government makes a lot of money when you own a home, a lot of money. Okay? They incentivize people to own homes, and they don't want to punish them for selling it and making money. They want them to buy another home, right?
You're thinking about getting a place. What I did was the government and everybody involved. There is zero trace of me living at this Guilford house. If you want to buy a house with your girlfriend or something like that, if you can get over your ego of having her be on title, I'm going to be able to sell my other house because that's technically my primary residence, so I won't pay capital gains on that. And this is her primary residence, and so we're not going to pay capital gains on that either. So that's kind of a little hack that you can do.